Why is saving cash making you poor? And how do you fix it before it's too late? And why is it happening? Listen, the US dollar is dying. We all know this. And no, that's not clickbait. Every single day your money is losing value, not because you're spending it, but because the government keeps printing more of it. Inflation is quietly eating away your savings, and the crazy part, most people don't even realize until it's too late. If you're still under the impression that saving money and working your job will get you rich, you're falling behind. Let me explain, and why it's not too late yet. Here's my first point. The dollar is losing value every year. If you guys are looking at my screen right now, this is the US dollar index. It's measured by the value of the dollar and how it changes year over year. As of this year alone, the dollar is almost down 12%, and we still have approximately 2 more months left of this year as of me making this video today. Compared to 2022, it is down 16%, and compared to our grandfathers' times back when they could afford a Mustang with a McDonald's wage, the dollar is down almost 50% from the 80s. Now, when the government prints more money, the supply goes up, but the value of each dollar goes down. Think about it. 20 years ago, a gallon of milk cost $2. Now it's about $5 to even $8, depending where you are. That's not because milk got better, it's because the dollar got weaker. You can save every dollar you earn, but if a currency keeps losing buying power, you're actually going backwards. Essentially, the dollar is losing value and everything around you is getting expensive. Saving cash used to make sense, but today it's a slow bleed and inflation is the knife. Here's my second point. The cost of living is exploding. Rent, food, healthcare, everything costs more. I'm not going to get too into detail with the statistics of what rent is compared to how it was 20 years ago. You guys probably have seen thousands of points made on that. You've probably seen it in your everyday lives. Meanwhile, wages have barely moved. So even if you work harder, your money buys less because the comparison of the amount of wage you're getting now compared to how everything costs now is not at all in sync. The system is completely going backwards. The system rewards people who own things that appreciate, not those who hold cash. The wealthy aren't lucky, they just understand how the system works. They own assets like stocks, real estate, crypto, gold, and silver, things that rise as inflation rises, if that makes sense. And that's how they stay ahead while everyone struggles to keep up. Essentially, we have the lower, middle, and upper class. As we are currently speaking, because of the dollar going down in value, the middle class is being eaten away, where it's only going to be the upper class and the lower class. So let's take this year for example, right? January 10th. Again, if you were to save your cash from the start of this year to now, your cash would be down about 13% because everything around you got 13% more expensive, if that makes sense. Now, if we look at gold per ounce, let's say you bought 10 ounces of gold January 10th at the start of this year to now, you'd be up 66% on your investment. Now let's look at Bitcoin. January 10th, Bitcoin started off the year at $92,000. We did go down in April when Trump was announcing a lot of tariff stuff, down 19%. Then we made an all-time high at about $126,000, where you would have been up 36% at the high of Bitcoin year to date. Right now, as of the filming this video, you would still be up 21%. Ignore my charting on the S&P 500 here. Now, if you were to keep the money, let's say, in the S&P 500, which is what most financial advisors will tell you to buy, say January 10th. Now, with the tariff news, you would be down about 50%, but if you buy more, you hold through, even if you buy in January, you would still be up on the high of 16% or 15%, roughly 16% essentially as of me writing this video. Now, let's say you did buy the bottom of the April low, you would be up 33%. Now, my third point. The stock market is the long-term equalizer, and also the crypto market. The stock market is one of the most reliable wealth builders in history. Over the last 10 years, the S&P 500 has averaged about 10% annual returns, and if you do look at it in the last 10 years, we have some years where we can do upwards of 25%. Now, there are speculations that we're in an AI bubble, with the government getting involved in a lot of open AI stuff. You can do what you want on that information. I don't think it's going to happen anytime soon. I don't think the government is going to allow a massive crash to unfold anytime soon. Again, none of this is financial advice, but the same people who've been telling you to hold cash, you can look at the cash itself, right? So if you had invested consistently even $100 a month, you're taking advantage of compound interest, which multiplies your gains over time. For example, investing just $300 a month at a 10% annual return could grow into over $200,000 in 20 years. That's the power of time and compounding. You don't have to time the market, you just have to be in it. So don't worry about, I wish I bought the April low, I wish I bought the 2020 low. Time in the market over timing the market. Now we're on the investor.gov website. We're going to play around with some numbers. Let's say you start investing with $1,000. Let's say you contribute $500 a month, and let's say you give it about 20 years, so before you even retire. Let's say the interest rate is about 10% annual, and let's say the range could be anywhere between 12 to 9. That's about average, right? Now, in 20 years, you're going to have a mean average of $441,000, right? And let's say you just save that money, right? So let's say you take $500. Now, let's say you take that $500 and you take 240 months, which is about 20 years, times that by 500 plus the $1,000 you started with initially. You only would have had saved 121,000, a quarter of what you could have had in the stock market. And this is not even keeping in mind the average decline rate of the US dollar per year. Let's say we even use a lower end number, like 3% loss per year. So if we're losing about 30% of our dollar per year, we're not investing 500 a month, we're investing about $485 a month, all right? So instead of us having $121,000 saved, we have a range of anywhere between $100,000 to $117,000 actually theoretically saved. Versus again, if we invested in compound interest, we could have literally quadrupled that money by just holding in the stock market. Let's play around with a little bit more numbers. Let's say we average what we've been averaging the last 10 years. We've had insane volatility where some years we could do 20, 25, 30%. Let's say the highest year we do 25% and the lowest year we do 15%. Using the same statistics, 20 years, $500 a month, and $1,000 initial invested. $2.1 million. Isn't that crazy? So essentially you reach a point where it doesn't really go into a linear graph, it goes into an exponential graph, right? Which you can see again if you compare the US dollar charts, the S&P 500 charts, Bitcoin, where inflation just starts exponentially rising like it does not care at all. Where there's a chance where on the high end, if we do some 40% years, you could have $13 million. You essentially ride the wave of inflation rather than riding the wave of the blood, if that makes sense. And some of you will still look at this and be like, no, I think I'd better save. Point 4, Bitcoin, the digital scarcity that cash cannot match. Bitcoin flips the system on its head. While the US government can print unlimited dollars, Bitcoin is capped at 21 million coins. That's it. There will never be more. It is literally modern day digital gold, scarce by design. And as more people lose faith in fiat currency, which is another term for the US dollar, where they have infinite amount of printing capabilities, the demand for something limited and decentralized such as gold, silver, and Bitcoin keeps growing. That's why Bitcoin continues to rise in value over the long term, because it represents scarcity in a world drowning in printed money. All right, put yourself in a scenario. The reason the dollar, pretend that's $1, ignore my handwriting, right? So, sometime I believe 70s or 80s, the dollar was attached to gold, meaning the government had a gold reserve, meaning it was tied to the amount of dollars they could print. Yep, it was 1971. Then, 1971. We went from dollar equals gold to dollar does not equal gold. That's it. They just split off. They realized, okay, let's give people the illusion, right? So dollar has value because it is linked to how much gold we have in the reserve. What if we just don't tell people how much gold we have in the reserve? That means we have a system where we could just create paper dollars. So essentially all that the dollars are worth right now are just paper, because we have an infinite amount of paper essentially, right? Now, the reason people are investing in Bitcoin is because 21 million coins, meaning the more the people, pretend these are people, the more people buy Bitcoin, the more value it becomes. Does that make sense? Because there's only 21 million coins. So essentially what the dollar was before the 1971 act, before they got rid of the gold currency, is the modern day Bitcoin, gold, silver, etc. So what we had here before is now here. Hopefully this all makes sense. Point 5. Holding cash is a new risk. Here's the harsh truth. Holding cash today is riskier than investing. Your savings account might feel safe, but again, with inflation running higher than most interest rates, your money is quietly shrinking. $10,000 today might only buy $8,000 worth of goods in a few years. Meanwhile, the people who took small, smart risks investing in assets will see their money grow while yours might disappear in plain sight. Here's the conclusion. Look, the system isn't broken. It's just designed to reward investors, not savers. There's two ways you could look at this. You either hate the game or you hate the player. Now, you never want to hate the player, you want to hate the game. Just become that player that you feel like you hate, but once you become that player, you won't hate the game anymore. Because the truth is simple. If you're not investing your money, you are losing it. The dollar is on fire, and the only way to protect yourself is to own assets that rise with inflation. Inflation is not going to stop anytime soon. They're going to keep printing money. They might make a digital currency based on the US dollar and erase her debt. That will be something for another video. I'll dig deep into what they might be doing with the US dollar and why they're purposely crashing it. That is my theory. Again, it's not financial advice, so stay tuned for that video. Anyway, stop letting your money sit still. Make it move before it's worth nothing. If you guys enjoyed this video, like and subscribe. Stay tuned for my next video, and comment if you have any questions. Have a good one.